Thank you, everybody, for joining us today. So we have a power-packed panelists today joining us. Very excited to have these three wonderful ladies joining me on the panel. And a very special day with International Women's Day. So hopefully we can have a very engaging and interactive session today. Would like to keep it as open to discussion as possible, and potentially some debate as well. So first, myself, so I'm the VP of Business Development here at Syfe. I have actually spent the vast majority of my career investing. I started in finance in Morgan Stanley in equity research, and then I spent 11 years at a large hedge fund in Singapore, basically running a global consumer portfolio, well, first financials and then global consumer, and then also building out a data analytics team. So a lot of experience on the investing side, as well as now on the fintech side.
Hi, I'm Lisa. I'm a partner at Saison Capital. We're an early stage venture capital fund based out of Singapore. As opposed to most people on the panel, my experience actually, I started life as a lawyer, which is the most risk averse, most straight-jacketed profession. And today I feel like the kind of risks I take with Saison Capital's capital, as well as my personal investing journey, I'm really excited to kind of share that with the audience. And I'm also really excited to hear what Noor and Grace have to say about women in investing, because I feel like, they've had a longer journey as part of like being more professional investors. So very excited for the panel today.
Hi, everyone. I'm Grace. I'm currently the co-founder and CEO of Unravel Carbon. We're an enterprise software that helps companies track and reduce their carbon emissions. Prior to this, I was a founder and CEO twice for venture-backed companies and have exited both as well. And then I went on to start an early stage venture fund that invests in tech companies in Southeast Asia, typically the first institutional check-in. And we have, pretty awesome LPs, such as the current CEO of Unilever, a lot of exited founders in Southeast Asia as well. I think in that portfolio, we have 30% who are female founders, because it wasn't specifically for female founders who wanted to be equal, but have the unconscious bias of selecting female founders because the entire IC is made of female.
Hello, everyone. I'm Noor Adhami. I'm currently the head of Security Services for Singapore. I've been with HSBC for 17 years. I do call myself a journalist. And in terms of that journey with regards to knowing more about investment and wealth, I'm maybe the rookie on this panel. So for everyone who's a newbie to that, don't feel weird, you're not alone. And there are different views on that panel in terms of shrewd investors, like some of my fellow panelists, and some of the beginners, maybe like me. Looking forward to the discussion, and happy International Women's Day.
Great, thanks very much, everybody. So maybe just some points to get us started. One point we wanted to make was to really set the scene for today is actually that the gender investing gap is real. So we see on average that women hold 71% of their wealth in cash versus 60% for men, and this obviously has a lot of implications on their wealth generation ability, etc. And so is one area where we would really like to see some further narrowing of the gap, going forward. First question on the poll: are women more risk adverse than men when it comes to investing? Fair. Wow. Okay, that's pretty significantly swayed in the true direction. So I will touch a little bit upon this, and I know that all of us will have our own perspectives, at various levels of the investment. And the investment experience level, et cetera, to talk about as well. But interesting. So yes, many people of you think that one of the maybe big reasons there is because of women being more risk averse. But actually, I think very interestingly, if we touch upon this, one of the major reasons we've seen that this gender investing gap is there is actually more income led, rather than significantly because of behaviors, specific different behaviors between men and women. I think so. This is a multiple choice question. You can choose as many as you think are relevant here. So in your opinion, what are some of the barriers for women when they invest? So pretty specific: financial knowledge, confidence. I guess, guys, are you Noor, Visa, Grace, surprised by any of these responses?
No.
Surprisingly, I think priorities is probably low down there. I think maybe from my perspective, I would have thought that would have been maybe a little bit higher, but financial knowledge and confidence coming out key. Great. So now I can get onto the income side as to why we see that some of those behaviors are prevalent, right? That it's much more about actually, on average, how much money women are making versus, significant behavior differences in their investing framework or confidence and behavior, etc. Because on average, women have seen to score or earn 20% lower versus men, sorry. And actually, when we adjust for this income difference, the actual behaviors between men and women investing is actually very similar and become no longer, significantly different. And I think that's a very key point, that we will touch upon a little bit more later. One thing we did want to say and make this perhaps a little more relevant to the audience and to where we are currently in Singapore is that this is true even here in Singapore, right? So there is a recent MOM study that the gender pay gap still exists here, and is 6% in 2018, although slightly better versus close to 9% in 2002. But you can see how little that has narrowed in such a long time frame, right? And this is adjusted basically for a woman in Singapore doing the same job as a male colleague in the same industry and same age and education level. And this is a point that we also wanted to make in relation to the fact that for men, actually, they join the workforce on average 2 years later after doing national service, but still that pay gap is very prevalent. And if we talk about some of the obstacles that we see for women in the workforce, one of the challenges that we see is that not only do women get paid sometimes less in the same position as men, but they are getting promoted less at every stage. So not just at the very senior levels, but even from the more junior levels and above. So it is really an impact which gets highlighted and much more significant as you move up the various ladders, and therefore you see that that income gap become much more significant at higher levels. And one of the other things that we see as one of the obstacles is the motherhood penalty, and where essentially that mothers get seen in still in many jobs this as perhaps being perceived as less committed, etc., because they're going to have children, and therefore this also basically makes it much more difficult for women to rise up the ranks in companies which are perhaps less understanding to this and don't have the policies in place to protect women against some of these negative perceptions. However, some good news is that the tide is turning, and there are a number of things which have changed, and essentially a number of basically a lot of gaps that are narrowing, right, between men and women. And we've seen this particularly around, if we look at the table on the left around female directors, so females in senior positions in the S&P 500, it is 30% now, which is obviously still not the right number, but is significantly better than a decade ago when that was 16%. So we're slowly getting there, but a long way still to go. And the other point we wanted to make is that essentially, if we look at the chart on the right-hand side, women are adding 5 trillion to the wealth pool globally every year, and this is only increasing. And what that means is that really women have a lot of opportunity to make a stand and to really impact the future economies, the future companies, and the future industries of tomorrow, right? And where they decide to invest their wealth. One other point that we wanted to touch upon, and I know with the panelists. This is perhaps a sensitive topic, but we will definitely get into this as well. Is that that there have been studies that have shown that women-led funds have outperformed. And if we look at one study from Goldman Sachs, essentially that 48% of female-managed hedge funds beat the market when we were having the significant volatility in March 2020 through to August, versus men at 37% who beat the market. And I think the context here we wanted to kind of communicate, and to perhaps the point around the poll, financial knowledge and confidence seen as two barriers to investing for women, is that actually when given the right platform and given the opportunity, it is shown how good investors women can be, and that there is really nothing to be afraid of. Maybe if I say it that way, right? And that all the tools are there, etc. And I think it's about giving women more accessibility, more financial knowledge, and confidence to invest their wealth. And if we look at now, as I mentioned, one way that you can make a difference is with women investing more of their money. But also, if we look at basically diversity, it is a very, very important point, and very, very important for many companies now, right? In terms of, if we look at how important diversity is in terms of performance of companies, if I look at the right hand graphic there, basically with most gender diverse companies are 48% more likely to outperform, which is obviously a significant data point, right? And also how important it is in terms of talent attraction, right? For employers to focus on diversity. And we wanted to perhaps close this section to talk about ESG, where it is essentially perhaps the bright spark of finance and can drive change. Because this is one area where we see that women can really make a difference, and actually where there is significant equality between women and men in the investment space, right? And if I use this example, so the actual original impact investor was Sister Patricia Daly, who was a nun of a fund and was was the first person who basically was an activist investor, showed up at annual meetings, etc., to fight for change in companies, right? And that's obviously, I think, something which perhaps is not commonly known, right? When you think about ESG and activist investors in these days. And some data points here is that actually, when we talk about ESG, this is where really women can have a significant amount of difference, right? Because if we look at a number of studies, women really favor impact investing. And this is even prevalent in Syfe, right? So in our ESG and clean energy portfolio, that almost half of all of our AUM for the thematic portfolios are driven into this portfolio from women, showing how much ESG and sustainability, etc., is very important for women, and having a point of view when we invest is very important for us. So now I think the much more interesting part of the panel. So we'll open it up for questions here, and I'm gonna basically arrow some of our panelists here. So perhaps first of all, the first question for Visa is, so what in your view are the contributing factors leading to the gender investing and pay gap?
I think your presentation actually covered most of it really well, and so maybe just to kind of summarize, right? I think first and foremost, if you look at averages, women occupy less senior roles, and that's true for all of us. We've noticed it, right? Most rooms we inhabit are full of men. And that contributes to the wage gap, which then leads to women having lesser money to kind of, invest. At the same level, I feel like there's, of course, that motherhood penalty, but I feel like a less disgusting is also women don't ask. So women negotiate less, they don't ask for their due, and then they find it very uncomfortable to have these, money-related conversations more often than not, right? And I think that also leads to an investing gap, because I notice around me, men talk about their investments a lot. Like, you don't have to, poke a man to say, are you an angel investor? He will tell you, right? Whereas women don't talk about money so much. They don't talk about what their investing strategies are with their friends. Mostly women around me are like, oh, I just have cash and fixed deposits, because I'm a little like unconfident, like not confident to kind of go about investing. So I feel like there's a confidence issue, there's an exposure issue. I feel like if women spoke about it a lot more, women would come and invest a lot more. And I think there's also like this whole priorities, which you also pointed out, right? Like women want like peace of mind, they want to settle down, because that's kind of what society expects them to do, right? So all of these, I think, are some sort of like patriarchal notions which are carried down and then lead to, weird investing behaviors that women exhibit. But like I think you pointed out as well, things are changing for the better. So that's something to look forward to.
Maybe on that point, Visa, and maybe if anybody else wants to jump in as well. Why do you think that women don't talk about investing as much? Because that's an interesting point, right? That you brought up, right?
As in, my view of it is, again, like coming from like an emerging market, which is pretty patriarchal in the way it's run, is that, talking about money and what you're doing with it just cheapens the relationship in some ways, right? Women don't talk about money, men talk about money. So it's just like these gender roles that have been defined for you in some way. And we're basically just carrying that along. But like I said, I see a lot of change in my generation of women. Like we talk about what we do with our money, where we put in money, syndicating some deals and stuff like that. So I think it's just like a hangover of a pretty patriarchal setup.
How would you address the issues contributing to the gender investing gap and the pay gap? And I guess maybe related to your current employer as well, Noor.
Yeah, I mean, when I think about the gender pay gap, I think it's a symptom. And when you want to deal with a problem, you don't go at the symptom, you go at the root cause. And the root cause, as Visa mentioned, and some of the slides that you shared before, earning power of women has been one of the key drivers kind of dictating their investment behaviors. And maybe we'll address that a little bit later on in the panel with regards to investment specifically. But I would like to kind of shed some light on what we're doing in HSBC to address the representation gap, as we call it, in terms of how many women make it to those senior roles. So we do have a number of different programs to address this gap. The first one, obviously, it starts with development. We consider this a hygiene factor, but we've designed specific development programs that address leadership. And these courses are different from all of the other kind of technical skill programs that people go for typically on a training day, because we realize that some of the things that kind of hold women back could be communication skills, presentation skills, networking. All of these things kind of add to that kind of leadership kind of presence, gravitas, if you like, and kind of addresses some of the unconscious bias in the selection process for senior roles. So you get the hygiene factor out of the equation. Then we realize that sponsorship is really important. So we do have sponsorship programs whereby we put those talented females in, we connect them with senior leaders to make sure that they have a voice, that they are remembered in certain discussions when senior roles are being discussed and people are scouting for talent. And a sponsor would say, have you thought of Visa, or have you thought of Grace, who's done this and that? Because we know that women, generally speaking, and I don't like stereotyping, but they're not as good when it comes to networking as their male colleagues, right? And then the last one, and I think this is the control, if you like, control lever that we have, which is targets. And we all know that whatever gets measured gets done. And we were, for example, in HSBC Singapore, we were very bold. We went out with a public statement that by 2022, end of this year, we will have 40% female representation at the senior bracket. And I'm very pleased to say that 2018, we were at 27% female representation at this level, and we are at 36% at the moment. And we still have 9 months before we kind of come to the end of the timeline that we put for ourselves. Now, is 40% enough? No, of course, we want to get to that balance, 50%, but it's definitely, it's good to celebrate those steps, getting to those targets. And in a way, it becomes part of your DNA with time. And one thing that I would say, because targets are usually frowned upon, are you forcing females into the leadership layers? I would say meritocracy is kind of the foundation of how we select. And what we've done is that the hiring policies have changed. So we make sure that there's a female candidate for every senior role that is being advertised. And sometimes we have to run ads again to make sure that we are attracting female talents into these job postings. And then from an interviewing perspective, we are now adopting more of a panel approach. Every panel has to be diversified, and every panel has to have a female on it to make sure that that decision and that bias is addressed as much as possible. So this is what we're doing to address the representation gap, which hopefully will allow women to earn more, and then all of the good things that kind of come on the back of it.
Great, that was very comprehensive, Noor. I think maybe one follow-up question from me on that is what do you think has been the key in that, right? Is it more the selection process? So you think it's those biases that come into play, so the panel interviews, making sure there's one woman candidate has been, very important in that, or is it the training, right, to make sure women have the tools to get to those leadership positions?
So I will have to say that women don't need more training. Women are good in what they do and they're capable. And history has proved that females graduating from schools and universities with high scores say that women have nothing wrong when it comes to IQ and capability and even EQ. Some studies show that women have maybe more EQ than men, but this is not about comparison.
Is that only some studies? Yeah.
let's not go there. I think women lack a bit of confidence. And I think someone mentioned that when a job is posted, men, if they hit 50 to 60% of the requirements, they're good to go. They're out of the door applying and pursuing. And sometimes women would want to hit the 100% before they get there. So we wanted to work on that confidence to make sure that people understand that you're not supposed to know everything on day one. There is a stretch in every role that you go for, and you have to be comfortable with the unknown. And I think that was the biggest barrier for women. The other one is we noticed that because of societal demands, and we know that maybe in a large percentage of the population, women are still the main child kind of responsible for childcare, which means that there's always worry that if they go after these senior roles, their work-life balance will be impacted, and it will impact their ability to fulfill their maternal obligations. So we had to work on some of these things. And what I realized is that women needed much more encouragement to be bold and take those steps forward. And that's why I said that the development programs are a hygiene factor, just to make sure that we cover the bases. But I know for a fact that women are extremely capable. And usually when they come forward, they shine through.
100% agree with you there, Noor. And maybe one for you, Grace, is what are you trying to change and advocate for in your current capacity as a senior or a leading woman?
I think what I'm trying to advocate is, both for female and male, which is essentially find a cause that you truly believe in, find a problem that is really large in the world or deep in the world and that resonates with you, and not wait for anyone to solve it, but use yourself as a vehicle to solve it. I do that through investing. I do that through starting the ventures that I've started, and starting right now, again, third time being an early stage founder is not a joke. Also being a founder as a mom of a 2.5-year-old is also not funny. But I guess, yeah, I think once you've found your calling in life, then make no excuses for that. And for a lot of women, you know, that's like around our age, right? Like 30 plus, early 40s. I think it's just about what we're optimizing for in that particular stage in life. You know, if we're optimizing for being a great mom, so be it. If we're optimizing for being a great professional senior leader in a corporate world, so be that, right? But if we're optimizing for living legacy and planning for retirement, I don't think we should feel any less. And I don't think we should discount our own capabilities or resources or networks. You know, now you have platforms like Syfe. Like I remember there was one weekend where I was hanging out with another girlfriend. She's Indonesian. She works in one of the largest banks here. And we were just talking about what to do with some of our liquid assets. And we looked at Syfe, like this is not a marketing plug, right? But this is truly what we did, you know? And then we compared Syfe with like a few other robo-advisory platforms. And then on the spot, we just trusted our instinct, and we, you know, put a 6-figure sum each on one of your, what do you call it? Like one of your portfolios, right? I think this was even before, you know, your ESG portfolio was an option. But so yeah, I don't think like we lack the confidence or even the intuition or the impulse or the risk taking, you know, from just that one example. Obviously, that's not representative of everybody, right? But I think once you're in the right networks, you know, communities like this, right, where we talk about these things, referrals or confidence or trust that you get from friends or from each other in what to do with your wealth can ignite a lot of wonderful, exciting journeys in investing.
I have a maybe controversial question for you, Grace, and I can touch upon this. I have a 15-month-old as well. So, but can you optimize for both? Can you optimize for professionally and for being a mother, Grace?
It's not a relevant question, Sam. I'm sorry. Like we don't know the answer. Like what are we comparing to? Another version of us in a parallel universe? Like we just do our best, right? We just do our best and optimize for both. Like I don't know if there is a better alternative of how I'm, you know, permuting my time now. I don't know, but as long as, you know, the child doesn't grow up as a kind of you know, a spoiled brat or something, and you know, I think we just do our best, and time will tell.
Got it. I think my view there would be if you have a very supportive partner. So essentially sharing the load, I think is very, very important, right? So you can you know, be optimal in both settings.
Absolutely.
Noor, do you have something to
yeah, so you have a 15-month-old at home, so I have 2 boys, 12 and 14. And let me prepare you for something. There are days when you will feel that you're not being optimal, neither at work nor at home. So prepare yourself for the journey. It's full of ups and downs, but what you said about partner support is absolutely spot on. As a matter of fact, I know that my husband is attending this session today, and maybe a public thank you to him again and again for everything that he does to support me. It's super critical who you have as a partner in terms of helping you navigate both work and personal.
But you know, I also have single parent friends, you know, whether they're a single mom or a single dad for whatever circumstances or reasons. And you know, without that, in the absence of that supporting partner, you just have to create as well, right? Supporting systems with other things to make it work. And that's what they have to optimize for.
Maybe Visa, you could touch upon your personal investment journey so far.
Yeah, sure. You know, very happy to. And in fact, I think it touches upon what Grace mentioned in terms of getting into the right networks. Like I mentioned, I started life as a lawyer, and it really makes you very risk averse at a very young age. And I used to keep everything in cash and fixed deposits. And then I married a feminist man, and he was absolutely shocked by my investment strategy, so to speak. And he was like, "You're going to be wiped out by the time you're 40. All your savings are not going to matter because inflation is going to catch up. So you know, you have a lot of work to do." So So I feel like first that network, then I joined the startup ecosystem 8 years ago, which is when I kind of got in touch with like angel investing and, other asset classes which are riskier than fixed deposits. Then I kind of came across a lot of books on investing, like The Psychology of Money, which is a great book actually to get started, which somebody I think asked in the questions as well, what's a good book to kind of get started on this journey. And I feel like these are the three things kind of helped me understand even, what investment class, what are the various asset classes available? How do you think about like diversifying your portfolio? And today, part of my portfolio is actually angel investing in crypto, so I've come from doing fixed deposits to crypto, which I'm not saying crypto is the best asset class to invest in, but you need an understanding of how much risk you're willing to take, you can take, and how you can diversify your investment portfolio. So I think getting into those right networks and getting that support system is absolutely critical to kind of having a coherent investment journey.
Great. And I'm not sure if anybody else wants to touch upon their personal investing journey, or maybe Noor as the beginner, more beginner investor among us, as you mentioned previously.
One of the poll questions you asked initially, like, what are the barriers for women investing? And some of them were knowledge. And knowledge, I think, had the highest score in terms of the answers. And I agree with that 100%. Investing is a little bit scary for someone who doesn't know where and how. And usually people who invest are people who are higher up on the wealth scale. And I know for a fact that most banks, when you open a bank account and you have a retail bank relationship, you are assigned a wealth manager only after you get to a certain level in terms of deposits and what have you, because the assumption is you will only save when you have surplus. And based on that kind of thought process, it meant that you will have an access to a wealth manager when we think as a finance provider that you're ready to do that. So the first time I had a discussion with a wealth manager was very, very late in my career. And I was a young mother back then. And he tried a few times and I was always averse to the idea because I'm one of those people who think, we have a saying in Arabic that says a bird in your hand is better than 10 on the tree. And I always thought that, okay, keep the money in a cash and I'm a brick and mortar person. So I would prefer investing in land or property or. But the way he was able to finally get to me was through the motherhood angle. And he once came to me and said, you have to invest in an education plan for your kids. And that was the beginning of my investment journey. And I've done that for both kids, right? And I'm always very conservative. So, you have to fill in this information, like how risk averse are you? Do you want to go into the high risk, high yield type of investments? And I'm always one of those people who I just don't want to kind of get something crazy over my investment. I just want to make sure I have a little bit more to cater for X, Y, Z. So I'm very methodical in my approach. And until now, and I do lots of investments with my husband, so I'm always dragging him into those decisions because I feel a little bit not so confident doing these decisions on my own. And mutual funds for us is the way, besides investment in property and what have you. So women, I mean, you said something about impact investing. I am tempted to venture a little bit more into the green funds because it's something that is very, very close to my heart. I see that reflected in my journey in terms of what I purchase on a regular basis. So I think that it would impact my investment decisions soon. Hopefully reporting will become much, much better so that I would feel much more confidence investing in things that I think are really sustainable, really green, and delivering for the agenda that I'm passionate about. That's kind of my personal journey on with investment.
And maybe touching upon that and maybe expanding a little bit on the ESG side, Grace, why do you think, I guess the data points we shared earlier, women are more interested in ESG investing?
Without offending anyone, any gender, I just think women we're wiser, we're more progressive. We, like Muhammad Yunus once said when he first started Grameen, like if he gives $1 to a woman, and or especially a mom, like how many cents would go to education, how many cents would go to healthcare, how many cents would go to sanitation, and only maybe 10 cents or something would go to shopping or something, and then also for children's education. And if you gave $1 to a man, it would go to like the third mobile phone, a motorbike, extra. Like, I think in general, we're more wiser, and we want to back things we believe to be good for the future, for our children. And so, yeah, I impact investing has always resonated a lot with women, because I was in that 12 years ago, and being still in that field now.
I think maybe in the interest of time, we'll take some questions from the audience. So one of the questions, and I'll leave it open to you can answer this. So one question is, how can women leverage our strengths to invest?
I think for me, it's about finding, and this is controversial, so definitely not a textbook answer, but if you can find something that you resonate with, right? Whether it is investing in a certain kind of companies, whether it's like certain tech companies or feminine tech companies or climate tech companies, or certain areas where you understand, you feel like you have a deeper insight and advantage versus your peers, then I would go for that. So in short, relevance to you, something that resonates and speaks to you would be a good place to start.
Yeah, I would maybe expand on that as well, right? And I totally agree with what you were saying, Grace, that I think where to start is really about investing in what you know, right? And that's where you can drive, more confidence and also more knowledge, because if you invest in companies and industries that you have at least some starting point, right? And and that's always the advice that I normally give to people, right? To whether that be the likes of ESG companies, or that is you like working out and you like Nike and Lululemon and those types of things, right? But companies that you believe in, that you understand, can be always a good starting point to invest in.
Yeah, and the world of wealth has become more and more democratized, right? So I just mentioned the role of a wealth manager, playing kind of what a wealth manager would do to help you in kind of navigating the investment landscape. But the phones have changed everything in the world. And I know this is not a marketing campaign, but platforms such as Syfe and all of the other robo-advisors out there meant that this knowledge is now available at your fingertips. And maybe part of the reason why some of the statistics you shared earlier about women contributing to that investment pot has significantly ticked up in recent years, I think technology plays a huge role in bringing down some of those knowledge barriers, right? It's the S in ESG, financial inclusion, is one of those things that we all aim to do, and governments are really keen on making sure that these tools are available to everyone and accessible, and they're governed to make sure that you're protected as much as possible.
One question that we've had a few times, and I know, Visa, you touched upon this, recommended books or online learnings.
Yeah, I think I was just going to expand on what Noor said as well. I
Sure,
think
sure.
the platforms like Syfe are very good with this kind of knowledge, right? Because I think the first thing you have to understand about yourself is your risk appetite. Which platforms like these are really helpful. Like, I'm a personal user as well of the platform. It kind of really lays out for you what your strategy should be. And I think all women need to kind of go through that training. And that's actually our strength, right? In terms of being methodical and meticulous in gathering knowledge, right? And then you start your investing journey. So I think it's about understanding what your risk appetite is, what are the various options available, because there are like a bunch of asset classes today, but I feel like robo-advisors like Syfe are really helpful. From a book standpoint, I feel like the book that has influenced me the most is Psychology of Money, which I think lays out very nicely, like a very basic investment strategy, and Warren Buffett's shareholders letters, actually. Those are really interesting, in terms of just trying to understand how markets work. And again, molding your risk appetite accordingly. So these are the two things I would highly recommend. And that got me started actually on my investment journey.
I've taken note of those. I will read them and let you know.
Great. Noor, Grace, do you have any books to recommend?
No, I'm here to get the recommendations from God, pass the baton to the experts.
I swear, I don't think I've ever read, any investing book. I mean, I've done an MBA and you do like corporate valuation and PE and stuff. But yeah, no.
Yeah, I'm probably in that same camp. I've probably spent my career investing, so haven't read that many books about investing specifically, right? But I would say, maybe as some of the ladies has touched upon, that basically, platforms, such as Syfe, where there's a lot of educational content, you can basically go through webinars, such as this one, or a lot of blog posts about markets, risk levels, how you should invest, etc. They can be great educational tools for you to get started.
I don't know if the books or the literature available out there on investing has been written by women. And it would be interesting to have people like you, Samantha and Grace, who have been in that business for a long period of time. Maybe you should write some books to help women invest from the vantage point of women. I think that would be helpful as well.
Retirement project, Sam.
Yeah, I was literally about to say that. No, come back to me in a few years, quite a few years.
We'll keep track.
But I would definitely say my view is that I actually do think that there is some more risk averseness in women when they invest versus some men, right? So I think there is some maybe, I know stereotypical, but perhaps some tendencies that women have when they invest, which can be a major strength as well, right? If you don't churn your portfolio so much, and you perhaps are able to take a longer term view and not check your stock portfolios, particularly in times like this, every day and every hour, that can be powerful, right? As we've seen over the years, if you stay invested and can have a longer term perspective. And so I think that some of those characteristics do come out to play to make women perhaps more better longer term investors. I think we have touched upon this, and I know that this was a question that I wanted to pose to all of you. But what advice would you give to women starting out in the investment journey to gain more financial knowledge and confidence to invest? And I guess we're talking about practical steps. So I know we've talked about education, etc. But is there any maybe first steps that you would point out?
Yeah, I have an anecdote to share where, like a couple years back, I have a group of like 5 close girlfriends, and we started talking about how much we need to retire. And, it starts from conversations like that, right? Over wine, Sex and the City or something. And then, and then there was a common misperception I remember where one of my closest friends thought that if you think you need, say, $2 million to retire, then $2 million is what you need to make, right? It's a very, very common sort of 101 kind of misperception. Whereas in actuality, 2 million should be derived from 4 to 5% of a capital base per year, and that capital base is what you need to make. So I think having conversations like that in safe environments with people who won't judge you would be a great place to start. And even if all the answers do not exist, right, in that moment in time or amongst that group of friends, then it starts that journey of interest, right, to find out these answers. But that was a funny one that I always remember.
And this also essentially maybe rolls into the next question, which is what investment strategy would you suggest for beginners, and how much outlay is advisable? Maybe I'll let Visa have a first stab on that one.
Yeah, that's an interesting one actually, because I think, like I said before, I think the risk appetite is very necessary here for you to understand your own risk appetite. Maybe that's 10% of your income, maybe that's 20% of your income, maybe it's your entire income, right? If you have enough savings to kind of tide through emergencies. But I think understanding you need some capital for experimentation, and that can be very small. Like, and I feel like platforms, again, not a marketing plug, but platforms like Syfe help you do that, right? Because you can start with as low as $3,000, $5,000, $10,000 and just test, test an ETF, test a fixed income product, test, other types of just basic stocks, right? You can figure out what your risk appetite in the market is using these platforms. And also, if you read stuff outside of the robo-advisors, you'll be able to figure out if I have $100, I do 80% ETF, 10% angel, 10%, riskier assets than angels, right? Something like that. But you need to kind of understand what that math is for yourself before you begin. But the best place to begin, I think, is robo-advisors. It's the easiest, it's the most accessible, and it's fractionalized investing. So like Noor mentioned, you don't need a wealth manager guiding you. You can start with very small sums of money, and then you can, as you go along, you can keep adding risk and adding capital.
Samantha, I will make a contribution that is kind of different. I can tell you what not to do, because very early in my life, before I became evolved into that very conservative investor that I am today, I just followed the trend in the market and I put all of my investment in one single stock. And 2 months later, it crashed, and I lost 60% of my savings. So all what I can tell you is that if you see that people are making money on something, that doesn't mean that this is going to continue like that. You have to really understand the trends and look at predictions. And again, maybe ETFs, mutual funds are a safer way to look at things, because you want to diversify the risk. So don't just follow the trend and don't put all of your eggs in one basket. That's going to be my contribution to this question.
Totally agree. And I think Grace answered one of these questions because it was related to what you mentioned, Noor. One of the questions was, can you share a past experience where you took a huge risk investing and otherwise and it paid off, and what lessons did you learn from that? And perhaps this was the opposite of that. But Grace, I think it might be helpful if you touch upon what you answered there in the chat.
No, so I think we're quite good at understanding human behaviors, right? Women in general, and so on the onset of the pandemic, I think sometime in January, February, when China had it, where Wuhan had it. I was like, what will shift? What will change, right? Remote work, remote meetings, remote anything. And I just went to look at the price in one of these leading companies, like in this case, Zoom, and saw that it was already rising a little bit, but it was still super low. So I just took it back to on a belief that the uptick will just skyrocket in the next however long that was.
Now I have to ask you the follow-up question, Grace. Did you sell it after that?
I did.
There you go. So in relation to not putting all in your eggs in one basket as well, it's yes, take bets on things that you believe in, but perhaps also diversify, because obviously things can be volatile if you do take particular large bets on one area, right, a company or industry, etc. And that's why we always encourage diversification and being perhaps a bit more measured in your investing, right? Whether that's putting in most of your money in a diversified portfolio, and then spending I guess we can say 60 to 70% in a diversified portfolio, and that 20-30% or so, depending on your risk appetite, being in some of these perhaps more targeted bets where you can afford to take a larger risk, where you're following a specific idea or passion, but you recognize that there could be a lot of volatility in that outcome. Perhaps we'll take just a couple more questions. Do you see any differences in men, women's investment style or strategy? And how could women leverage their strengths to perform better at their portfolio? I do think that there can be some differences, right? But in terms of how you leverage your strengths, it is really pretty similar, right? So it is looking longer term. It is basically being able to look through volatility and not basically react hastily at any outcomes in the short term, right? I think that would be key for me. Okay, I'll maybe ask one more question. How can women help each other to be better investors?
I think we just need to start talking about it more. That would be my first thing. I think this whole taboo around talking about money, like I think Grace mentioned, and it seems like she has a pretty good community of women that she speaks to about her investment strategies. I think women talking to each other more, women, like I think as business development head at Syfe, right? I think helping slightly more tailor-made programs for women to kind of start their investment journey, because clearly what we've seen today is women lack the confidence, women lack knowledge, all of those things are true, right? So how do you help build women, build confidence and exposure in women is I think the problem to solve for. And I think the more we start talking about it, the more I would imagine it's going to be helpful.
Exactly along the same lines. I mean, this discussion is a great step. First step in kind of opening up the discussion. And you can see from the questions, they're all kind of evolving around the same theme. How do we do it? What is best? What is the advice? And I think the more we discuss and the more we engage in the dialogue, the better. So find yourself a group of women and decide whether instead of having a book club or whatever it is that activities you go for, dedicate one of those sessions and those gatherings to discuss money. And see where it goes. And I think there are lots of women right now in the finance sectors, in wealth, in investment. There's lots of female representation, and just tap into that. Reach out to people. And by the way, LinkedIn as a professional network, most of the times when you send a message to someone, if you find someone's profile and you think they could be an expert, reach out to them. I built so many connections with people that I didn't know before, just kind of cold calling, like just dropping them a note and ask me a question, and you'll be amazed with how willing people are to help. So just go out and seek the information, the knowledge.
Yeah, I think for me, just to provide, different answers, find 3 companies that you truly admire or that you use a lot, right? Whether it's Carousel or Shopee or anything, and try to read up about them. That's one thing I like to do, which is super nerdy, which is I like to go and download cap tables of companies. Like I just want to see who has invested how much in what, who, how much ownership does the founder still have, the cadence of investing. And I just like to see the story behind the story and how capital has enabled the companies that I admire and I like. You can do that by going to Accra. You can buy biz profiles for very cheap of companies that you have an interest in. You can read tech platform journals like Tech in Asia or E27. There's also a database that I subscribe to called Venture Cap, where you literally can download any cap table of any company in Singapore and in the region where they're live already. And it's just, you will feel a lot more knowledgeable if you see the agendas behind certain companies that you admire. But find something that interests you and go deeper in those areas. Great.
I think on that note, guys, I think we can close here. I think that's really appreciate and thank you all for joining us today. Very, very insightful and an engaging conversation. So thank you very much, and thank you all to listeners for joining us today as well.